AMC stock is finally doing okay today. We're up 8%. Pretty good day, considering we have not had a green day in the last 1, 2, 3, 4, 5, 6, 7 trading days prior to today. If somehow today we end red, that will be 8 trading days in a row we have been red, and these are not small days. We're talking over 20% drops 3 of these days, and over 10% drops the remaining days besides yesterday. So it does look like we're in this bottoming process. That's something I want to point out right at the beginning of this video. I think a lot of bad news has already been priced into AMC. Obviously, this would be like AMC stock at $1.20 on the split adjusted basis. We were in the $4 or $5 ranges just a couple of really days ago, but like 2-3 weeks ago at this point. On these now split adjusted prices, that would be in the 30s or the 40s where we were at just 2 weeks ago. So I do want to go over what's happening today, what's going on, why AMC stock is up 8%, and everything else you need to know as an investor, as a trader in AMC stock. Hit the like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I hope this video finds you well. So it's very volatile. Keep that in mind. AMC stock is now up 8.62%. Like 30 seconds ago, the stock was up 7.5%. So the stock is moving up and down like 1%. Kind of faster than you can even blink at some points today. So it's very volatile as we start this day of trading. I think that is very important that everyone does keep that in mind, that we could have a 15% up day today, or the stock could give it all back by the end of the day today. We actually seen that happen yesterday to a lesser extent. The stock was up about 6% as this lunchtime video was coming out. By the end of the day, you actually closed down 1.5%. So it's going to be very volatile. Now, what is causing this move in AMC stock here today? Well, I think there's a couple things going on. Obviously, you've priced in a lot of bad news already. So it's one of those situations where I've brought up like the bankruptcy argument probably too much here on the channel. And that's basically to say, when a stock is going bankrupt or at its lowest point, we've seen a lot of rallies because it's at its low, right? It's beaten down. It's not doing well at that point. People are like, hey, how much worse can it get from here? And obviously going bankrupt and getting delisted is obviously worse. But I'm making that same analogy to where AMC is at right now. We're not going bankrupt, obviously. Hopefully that's not what you guys pull out of this analogy. It's to say, hey, how much worse is it going to get? Like when even your most hated stocks are at stupidly cheap prices, you almost have to buy them because they're just way too cheap. And that is kind of what I'm thinking about here. That is a reason I do think AMC is bouncing. And I do think actually, with so much bad news already priced into AMC, when we actually get news that AMC has raised capital, the stock might actually bounce big off of that. So I don't know if that kind of announcement is coming anytime soon. AMC does not need to raise capital. And I was actually thinking about this today. The 70% of investors that 70-80% of investors that voted yes to this reverse split, to authorizing 25 million additional shares, and the ape conversion. Nobody really thought this was going to happen, that AMC stock would lose 80% of its value after the split. Or I don't think anyone would have actually voted for this. I don't think AMC would have, well, they probably would have done this because, they're just in the business of trying to save their company. But I don't think anyone's really happy with what has happened recently with AMC, besides obviously the shorts. But that brings up the whole other set of issues where shorts are still down on their short positions because of those cost to borrow fees that they have been paying for months and the delay of the court kind of date. So I don't think it's very advantageous for AMC to raise capital right now, although I do see that as more of a positive catalyst at this point, considering we've already priced in a lot of dilution. So it would really have to take AMC coming out and saying, hey guys, we diluted shares like 50%. And then at that point, I mean, we've already dropped 80%. Odds are you've even factored a dilution raise on that magnitude into AMC stock already. And then AMC is going to raise billions of dollars of capital. I mean, is it that bad? It's tough to say. But the stock is down 80% in just a couple of days. So I think you've priced in a lot of dilution already. That's a big reason why I do think AMC stock is up almost 9% at the time of recording this video. We also have a lot of FTDs that do come due every single day. AMC stock is still on the threshold securities list. It does not look like they have been in a rush to get rid of these FTDs by any means necessary. If we go ahead and we'll refresh this FTD list, we have not gotten new data coming out for next week. But what we are seeing for today are FTD numbers of around 7.5 million. Tomorrow you drop to 6.86 million. And then again, on Friday, you're at 7.1 million. And then on the next Monday, you start off at 7.7 million. So I think we're waiting for more numbers here. But the FTDs might start to play a role in AMC stock. And as you guys do know, the float is a lot smaller now than it was. So those same FTDs could definitely drive more upside than maybe we've seen before. Now, let's take a look at the option activity. What we're seeing is about 3,000 more calls that are now in the money relative to what we've seen kind of yesterday. And if we go ahead and just break this down with a little simple math for you guys, 3,000 times 100 is about 300,000 shares that had to be bought in AMC stock today so far. If we're looking at volume currently of 13.7 million, it's not a huge amount in terms of the total volume, but it is buying pressure nonetheless. You mix that with some FTDs that need to be covered as well, and it doesn't necessarily surprise me. AMC stock is up 9%. I thought the stock was going to bounce at $12 per share. You're at $11.90 per share. $12 per share is now going to be a major resistance level. If you break above that, well, that opens the floodgates for some more upside. Close to even that $16 price is currently where the 8-day moving average is. So if you can get above 12, then you have a clearer shot to the mid-teens again. And even what we've seen from Wall Street recently is a lot of constructive commentary around AMC stock, and they've lifted their price targets, and we're not even close to Wall Street's price targets. If AMC is under Wall Street's price targets, there is a problem, and not necessarily a problem, more so than an actual opportunity for you to make money and to actually come back into maybe even a levered position. We're making trades on AMC stock today. We're making trades on other stocks as well, playing some earnings trades. If you guys want access to all of my trades in real time, link down below in the description of this video. Let me know down below in the comment section as well if you guys have signed up for that and it has not worked for you. I don't want to leave anyone hanging, so let me know if you are having any issues with that. Sometimes there is issues and it's just unfortunate, but you're always going to get issues with everything. Now, as far as the other option activity, right, out the money calls at 56,000, in the money puts at 28,000, out the money puts at 46,000. Let's go ahead and take a look at the actual option chain to get a feel of what we're looking at for kind of this $12 strike. So you have 7,300 calls that will go into the money if we break above $12 per share. That is 20 cents off of where we are right now. So who knows if we're going to. Obviously, it's pretty volatile. AMC stock is up over 8% today, so it is a pretty good day. And at the $12 put, you have about 4,300 calls that do go out of the money. Both of these calls going into the money, calls or puts going out of the money, is buying pressure. That in all is about 11.6 or 11,600, maybe I should say, calls, well, total buying pressure worth of options that would go into the money, or in this case puts go out of the money. Times that by 100, you're looking at like 1.6 million shares that would need to be bought by the market makers. That's a pretty sizable amount compared, again, to the volume that we're seeing today. A little bit less than 10%, around 8% of the day's volume so far, just at the $12 strike, not to mention the 1150 that already went into the money today, and that cumulative is like 3.8 thousand options that did need to be hedged for by the market maker. So decent amount of option activity. Things start to get really big once you get above $13 per share. At the $13 call, you have 12,268 options that are held on the call side, and at the $13 put, you have almost 7,500 puts that are held at the $13 strike. So if you do start to break above 13, that's where things get a lot more crazy. So that's a key level I'm watching for as well. $12 per share, going to be a big psychological level that we definitely need to watch. Now, let's go ahead and break down some of the Ortex status, see if there is anything that is actually accurate over here. Don't hold your hat on it. Take this information with a grain of salt. As you can see, short interest of free float still says 13.35%. That is obviously not true. If you look at the shares out on loan, that is at 28.5 million. Look at the shares out on loan over the past 3 months. It's up 41.5%. Look at the estimated short interest of free float from Ortex. It's down 37.18%. That's not true. There's just polar opposite data reads that we're getting right now. If you take a look at the official short interest report on August 15th, I've talked about this before, but I think it's important that everyone knows this and pays attention to it, was 29.24%. So what's happened since August 15th? Well, the stock has dropped from that 30 range down to almost $10 per share even. I mean, short interest did not drop from 29% to 13%, and you've seen the stock collapse 60+% since August 15th. So these numbers are just, unfortunately, as of right now, not the most accurate to go off of. We have a short score of 79. We have $206 million worth of short positions in AMC. Free flow out on loan says 20.15%. Again, estimated short interest of free flow at 13.35%. Not accurate. Days to cover, 5.24. That could be pretty accurate. Cost of borrow fees, not accurate at all at 17.52%. And utilization at 84.33%. If we take a look at the cost of borrow fees, it doesn't look like we're getting any real numbers over here. 15% cost of borrow fees from Interactive Brokers. That does not look true to me. Cost of borrow max, 15.72%. Cost of borrow average at about 10%. The kind of interest of shorting AMC right now does not support where the cost of borrow fees are. In other words, there is massive interest to short AMC and a massive demand for shares of AMC to short. So the cost of borrow fees at 15% doesn't make any sense. And hello there, AMC. AMC is up 10.44% now, over $12 per share at $12.05 per share. So we really want to see how AMC stock reacts around these levels. If we take a look, it's been a pretty much a straight move up ever since the open today. And again, you do see about 11,000 contracts that do need to be hedged for by the market makers above $12 per share. And the higher we go above 12, the more and more essentially shares need to be bought or shorts need to be covered by the market makers, and that could help fuel some upside. And if this is the actual bottom and this is the bottoming out bounce, then this bounce could continue for quite a while. Now, let's talk about the broad macro of what's going on today. If we take a look at the Fed rate monitor tool, there's a 14% chance of another rate hike coming in September. Does not look likely that we will get another rate hike at all. Some of the economic data that we are getting coming out is not so great. We had some revisions to the GDP growth rate quarter over quarter. That came in at 2.1%. You were expecting 2.4%. So some revisions there, and some revisions as well with some of the PCE numbers. PC prices quarter over quarter, you were expecting 2.6%. It got revised down to 2.5%. And you could see these are the revisions because you can see the the second estimate right here, highlighted in blue. And core PC prices, quarter over quarter, second estimate was expected at 3.8%, came in at 3.7%. Real consumer spending came in at 1.7%. We did not, well, we had a forecast, but we didn't have a consensus view of 1.6%. So that went up just a little bit from the actual forecast. GDP sales came in at 2.2%. You were expecting 2.3%. Pending home sales, month over month, came in at 0.9%. So a little bit better. You want to see more homes actually being sold. You don't want to see this stalemate, this lack of housing that is available. That just drives up prices. That is bad for rental prices. Pending home sales year over year comes in a little bit worse than expectations, down negative 14%. The forecast was down 12%. But the big story of the day today, as far as data is concerned, is the ADP employment change for August. That came in at 177,000. The consensus was 195,000. Now, with the ADP employment change coming in below expectations, and the JOLTS job openings dropping about 700,000, that was yesterday. That was the reason why the NASDAQ was up about 2.5%. Well, there's two outcomes to this, right? So one is the JOLTS job openings is just falling, and that's okay as long as the unemployment rate is not shooting up and we're still seeing a good labor market, right? The soft landing narrative is job openings coming down, unemployment staying low. If unemployment rises because, well, and JOLTS job openings are going down, well, that would be pushing towards that hard landing, that recession narrative. So I think these data points makes Friday's labor report that much more important. If the unemployment rate rises to 3.7% or 3.8%, which is certainly possible. The high of this cycle has been around 3.7%. Well, if the unemployment rate rises, well, the JOLTS job openings was just a leading indicator of that. And that is very much recessionary, right? When the unemployment rate rises 0.5% in any given period, you have always seen a recession. So if theoretically the unemployment rate breaks above 4%, you will see a recession. Or at least you have every other time in history. So this data coming on Friday will be very important. We have big data coming tomorrow as well with the personal income month over month, personal spending, and the PCE numbers that do come out coming tomorrow, guys. So this is kind of what you need to know for the day today. A quick check back on AMC stock, and the stock is continuing higher, up 11.5% at the time of recording this video at $12.13 per share. Again, stock's very volatile. Anything can happen, but we're starting to get that bigger upside move. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.